This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. So I wanted to make sure you had a good write-up before the weekend to contemplate, and that is what I did. Big one. So I talked about 200 days. Oil absolutely is not coming back online for a while. And by the way, there's more offline now than during the COVID lockdown. So it's going to take a while for that to work its way out and then ships to work the way back in and for the oil to get back out and the other supplies, fertilizer, helium, sulfur, et cetera, et cetera. So those are still something that is not being appreciated as it relates to the risks of mid-April. And Jeff Curry out talking about mid to late April when oil inventories run out. Ironically, I saw this volatility regime coming in March through May, remember? And then I said, but I see stabilization the week into this Easter week, Holy Week to Easter week. Didn't see quite the extravaganza, obviously, with the gap up. Our new range is now 6,800 to 6,900, and I write about that. Some very, very large calls were sold yesterday at that 6,900. I posted that lower, and some very large $50 calls in VIX got bid up as well. So folks are starting to position and sell or get ready to sell this rally. I'm not a big GEX girl, but I will follow the lemon, for those who know the lemon. Anyway, dealers are inclined to buy on any move above yesterday's close. This is from 2 days ago, and that buying would persist through SPX 6825. Above that level, however, there is only selling and a lot of it. So this was on 4.8 2 days ago, but the point is, this is a lot of zero DTE. We've talked about this, and anyone who trades options knows that it is the flea on the tail of the dog, and that flea makes that dog move. So underlying is definitely reacting to a very, very strong option flow and short covering and CTAs and ETF rebalancing, all the stuff we've talked about. So we still have big problems, though. On top of that, Saudi Arabia confirmed big hit to the east-west pipeline. Goes on and on. Kuwait, also severe material damage. We have about 800 ships still stuck, 426 oil tankers, 53 gas tankers. I went through and really put this research together for you so you have it in the back of your mind as you're sitting there going, oh, are we going higher? Yeah, well, earnings, mechanical buying, all these excitement reasons, but mostly short covering, and on false ceasefire headlines. Anyway, let's just see. But the point is, be prepared for headline risk always in this backdrop of Trump as president. Anyway, move along. A great interview by Henrietta. I follow her on X. But long story short, we're still receiving shipments from before the war started. These stop and come to a full halt also about April 15th, which coincides with the Jeff Curry comment on Bloomberg. So long story short, we all know this intuitively. I don't have to tell you, but Iran risk is not priced in. Anyway, so I talked about this period where we have stabilization and it's over by the end of this week. And these fundamental flows will start to come in eventually. Counting barrels right now is a big pastime. This is a big oil trader says every player in the North Sea window is bidding and nobody is offering. That's a huge point. Cash is trash and barrels are king. So I read about the power vacuum and power shifts, a great article by Patricia, and then I go on. Anyway, we have a lot of issues right here with the Strait of Hormuz still, and Iran is winning, and that is dangerous for Trump, and Israel's not backing down, and time is running out, and weekend risk is dead ahead. Anyway, I've talked about this for pullback in investments in AI. Now, that's, again, they're trying to repair a lot of damage internally in the GCC, the Gulf Arab countries, but in time, this is definitely going to come in and matter. But for right now, we have mechanical buying that has triggered this short covering rally, and it is likely to peter out, I would guess, at or near that 6,900. So I am looking at this also overview of Trump potentially losing his fight if Congress does not approve more funding. I've written about this before. The War Powers Resolution, Congress comes back from their leave and they will need to vote on this, and who knows how it's going to go. I'll let Alexander track that sausage making in DC. Maybe it doesn't go well for Trump. Maybe he does get everyone in line 69, and they say, yep, we're going to move forward. Or maybe there's some false flag that triggers before Congress comes in and votes on this next week. So we have a lot of uncertainty. Market does not like uncertainty, and there is selling into this top, if you will. If we get resolution, however, there is always this. A ceasefire is the bear's worst enemy. I've said that before for weeks, and that's what we got, a fake one. But the point is, if we were to get a real one, the market just in sentiment alone would rejoice. However, price of oil is not going to come down significantly. There's going to be like a $15 war premium or risk premium on the price of oil moving forward. So that will have to be taken into consideration, not to mention all of the replacement costs, et cetera, et cetera. Anyway, I write about this just to remind you, we did come into that 68.40 area for today, basically. And then we're basically going to be looking at this overhead of 6,900. We definitely had some very large positioning come in. They were selling $184 million worth of September 6,900, 6,910 calls, and a whole bunch of that VIX $50 call came in the 120,000 contract level. Remember my 1929 VIX bounce level? I bet you that's in play. But this is what happened yesterday, or I should say the last few days. This is hardware over software. AI, you remember the Anthropic mythos, which I posted about, and Tim has been very, very close in also keeping me updated on what's going on with the AI ecosystem. They announced the mythos and then pulled it back and said, oh no, it's just too powerful. It's going to be used by terrorist organizations and it's going to be terrible. And then Powell and Bessent, Treasury Secretary Bessent and Fed Powell got together and called in the major banks. We're not in a crisis. They're trying to avert one, talking about the issues with the AI that is morphing into a big risk stack that the market is not pricing in. So anyway, we're going to watch continued, but probably not for today. It's not going to be very eventful here, but dollar yields, oil, and VIX once again push higher as the ceasefire limits are tested and pushback is announced. This is where you're looking for your bearish. I'm looking for my bearish mid-April to mid-May volatility warning, and this would complete at the end of, well, today. So anyway, this is it. We've got no ceasefire, really. Israel is doing everything in their power to sabotage it, and I won't even talk about Epstein and Melania and all that distraction. It's really, really end of week. We have to get through, obviously, end of month with Bank of Japan also rumored to hike. CPI wasn't as hot as expected, but CPI doesn't really matter. It is a growing inflation trend with war as the trigger. Wars are always inflationary. So they get to a point in some cases where they become a deflation impulse, and that's something we worry about later. But right now, we're just starting to see some of the data in the higher energy complex. Anyway, that's it. I just wanted to remind the market is very manipulated, very, very, very manipulated, and headline risk is major. So make sure that your trade positions can defend or withstand that type of drama. And that's the trick. Lots of ways to make money. The trick is not to lose it, and it's very hard in this domain. Okay, so what are we doing right here? Here's your SPX I was just talking about, and 68.45.50 is my quarterly level, and 68.40 is at JP Morgan level, and we have crossed over only one line in my oscillator down here, so we haven't completely moved higher, but the SPX that we have just hit is 68.45.77, no joke. So if I was to do this, I'll just kind of show you. How do I come up with a quarterly? It's really not rocket science. So you can see the close over here. Back in December, the close was 68.45.50. Ta-da! That's how I came up with that level. What does that mean? Does it mean we're going to stop cold here? Absolutely not. We could absolutely move back into 69.45, which is that prior December high. This is a quarter, remember. So this is January, February, and March. This January, February, and March candle is bearish engulfing. This candle so far is an inside candle for the quarter. Very rambunctious bounce, no question. But the point is, and by the way, it bounced right on 65.21 quarterly support. Long story short, I can't expand it enough to kind of show you. This is it right here. We need to get above 68.45 and stick that landing, or we're going to soften and come back in. So for right now, I think that's it. All right. Now on a daily, I'm really showing you on SPX. we need to break 68.29. We've already tagged the quarterly. We've already got the JP Morgan collar. We've already got the 6,900 September calls of size that were sold. We're not sorting, are we? Whatever. So that's basically the morning tag. You're it. And VIX, let's talk about VIX. It is right on my 1929. So anyone who's been here for a while knows that I really, really like this level for reversion. So in other words, it stops going down around 1929 and starts moving in a bounce. So not today. I don't think it's going to be today, but it's definitely one level that I look at a lot.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.